Hello, good morning friends. I hope you are understanding accounting standard. Yesterday we have taken accounting standard 28. We have discussed the basics of AS28. AS28 deals with impairment loss. Impairment loss is carrying amount minus recoverable amount. Carrying amount is the cost minus depreciation minus previously accumulated impairment loss. Recoverable amount is higher of the two, value in use and net selling price. Value in use is the present value of future cash flow from the use of the asset and present value of the salvage value, and net selling price is selling price minus cost of disposal. An asset is impaired when recoverable amount is less than carrying amount, and we have to provide for impairment loss. We have to look for indication of impairment. Indication can come from external sources, indication can come from internal sources. So this is what we have done in the first lecture. Good morning everyone, and we are going to conduct all this newly added lecture in your current batch. AS15 we are going to take, AS23, AS25, AS27 and AS28. So please just now subscribe to the YouTube channel AS Foundation. Also share it with your friend. Share with maximum number of your friends in intermediate. Immediately, don't wait, because they will also be benefited when they will watch this high quality video lecture. If you want the notes of this accounting standard 28, you can fill the Google form and our office staff will mail you the accounting standard 28 in PDF form, which you can print and study. We have covered more than 30 questions in the classroom, which we are going to conduct every day, and many questions from outside the study material are also taken. All study material questions are taken, but questions from outside the study material are also conducted. In case if you want to purchase the entire lecture of accounting standard either in Hindi or in English language, you can purchase from our website vinod.in. You can purchase the entire advanced accounting subject. We are running a scheme now at a very affordable and reasonable price. You will get the entire study material hard copy delivered to your doorstep. You can also purchase CA Intermediate Financial Management. We have recorded in two languages, Hindi and English. The English is pure English, no use of Hindi word, very useful for students from South India. We have covered in financial management all questions of your study material. All means 100% questions of study material, all past exam questions, RTP questions, MTP question. I met certain students who have appeared in exam of FM and they are complaining that what the other teachers are teaching in classroom are very simple and what they are asking in the exam is altogether different. And that is the problem. The student want some mental relief in the class, but that is not enough. You have to practice more and more varieties of question, more and more difficult level of question. Practice more, revise more, you will score more. Okay, so our website is vinod.in, from where you can purchase advanced accounting, financial management and lectures of other teachers also at a very affordable, reasonable price. The idea is to make the lectures available to maximum number of students at a very low price. You can also purchase books of accounting standard, financial management and other subjects. So today let us start with paragraph number 14. For calculating value in use, we will require discount rate. For calculating value in use, we will require discount rate. First point is discount rate should be pre-tax discount rate. discount rate should reflect the risk specific to the asset. If the asset has a higher risk, it will be discounted using a higher discount rate. Pre-tax discount rate means do not adjust for the tax effect. In FM, they teach you post-tax discount rate, which is equal to I into 1 minus T. But in intermediate account subject, I will only take the cost of capital as a discount rate. Cash flow is before tax. Cash flow is before tax. Discount rate should also be before tax. Or you can take weighted average cost of capital of the company. Weighted average cost of capital means average of cost of different sources of finance. More about this in FM subject chapter called cost of capital. In account subject, they will give you the discount rate directly, but only for theory question. These are the points to be kept in mind. Pre-tax discount rate, it should reflect the risk. We can take weighted average cost of capital, or alternatively we can take incremental borrowing rate. Incremental borrowing rate means if I want to borrow from the bank today, for acquiring a certain asset, how much interest rate would be charged. And while estimating the discount rate, we have to take care of currency risk, country risk, for which cash flow is already adjusted. Like in one previous question number 5, cash flow was in dollar, so my discount rate was US dollar discount rate. Now comes to the accounting part. First, today we will see impairment of individual asset. We will see impairment of individual asset. In case of individual asset, there will be two categories: non-revalued and revalued category. Non-revalued category means it was never revalued earlier. Revalued category means it was earlier revalued upward under accounting standard 10, and we have created one revaluation reserve. So with respect to revalued asset, there is a revaluation reserve in our book. Okay, but with respect to a non-revalued asset, that is which was accounted using cost model under AS 10 or under AS 26 intangible asset, if there is an impairment loss for a non-revalued asset, the impairment loss is transferred to profit and loss account. But in case of revalued asset, if there is an impairment loss, the impairment loss will be first adjusted against revaluation reserve, and then any balance will be adjusted against profit and loss account. That is how the accounting for revaluation will be done. Okay, so let us read. An individual asset is impaired if the carrying amount is more than recoverable amount. If carrying amount is less than recoverable amount, there is no impairment. Then there is no impairment, and therefore you don't need to provide for impairment loss. Accounting treatment. If there is an impairment loss is equal to carrying amount minus recoverable amount, and if it is a non-revalued asset, then first we are going to recognize where? First we are going to recognize in profit and loss account. After providing for impairment, assets carrying amount will reduce. After providing for impairment, assets carrying amount will reduce, and therefore in future the depreciation or amortization will also reduce. Depreciation or amortization will be provided over the remaining useful life based on revised carrying amount. Then we have accounting entry. Accounting entry 1, two entries will pass. Impairment loss account debit to provision for impairment loss. And second entry, P&L account debit to impairment loss. Impairment loss will be closed by transferring to P&L account, but provision for impairment loss will be shown as deduction from asset in balance sheet, will be shown as a deduction from the asset in the balance sheet. And suppose it is a revalued asset, we have a revaluation reserve created on that asset, and now that asset is to be impaired. First I am going to debit revaluation reserve, and if that is not sufficient, we are going to debit profit and loss account. After providing impairment loss, carrying amount will reduce, hence depreciation or amortization charge will reduce. In case if they ask you to pass journal entry, the journal entry would be, first entry will be impairment loss account debit to provision for impairment loss. First entry is same, but the second entry is different. Here I am going to first debit revaluation reserve, then I am going to debit P&L account. If revaluation reserve is not enough, then debit P&L account. If it is enough, then there is no need to debit P&L account to impairment loss account. To impairment loss account, being impairment loss transferred to statement of profit and loss. So I have made a quick summary of this. In case of impairment loss, if it is a non-revalued asset, transfer to P&L account. If it is a revalued asset, first recognize in revaluation reserve to the extent of revaluation reserve balance, and any excess will be transferred to profit and loss account. Some important notes for you. Provision for impairment loss is just like advance accumulated depreciation. So suppose if you provide depreciation, cost is 100 rupees and the life is 10 years, you are going to provide depreciation of 10 in each year. Okay, but if the asset is impaired, suppose after 2 years the asset is impaired, so what you are doing, let us say impairment loss is 50, so you are going to reduce the asset value by further 50, and now the total depreciation plus impairment is 10 plus 10 plus 50, total 70 we have already provided. Remaining 30 will be provided over remaining year. So what you are doing actually, you are only accelerating the depreciation. You are only accelerating the depreciation. Because of provision of impairment, what should have been written off in future period, you are writing it off now, so that the carrying amount becomes closer to recoverable amount, and carrying amount is not higher than recoverable amount. Impairment loss can get reversed in future also. If the recoverable amount goes up, we can reverse the impairment loss. About reversal of impairment loss, we will discuss in the last part of the chapter. On which date we should provide impairment loss? Suppose my accounting year is 1/4/25 to 31st March 26. When should we provide for impairment loss? Any day. You can provide for impairment loss on any day of the year. Suppose you want to provide on 30th June. Can we provide impairment loss on 30th June? Yes. Suppose you want to provide on 15th August, Independence Day. Can we do it? Yes, you can do it. The standard does not tell you on which date you need to provide impairment loss. Once you provide impairment loss, you are going to first provide depreciation till the date of impairment. Important point. Suppose I want to provide impairment loss on 30th June. I will first provide First, I will provide depreciation from 1st April to 30th June, that is 3 months. If I am following revaluation model, important thing, then I am also going to provide revaluation, okay, whether upward or downward. If I am following revaluation model, then I will have to also provide for revaluation. So depreciation, revaluation. After that, you will get an updated value of asset. Updated value of asset means whatever you are supposed to do as far as depreciation, revaluation you have done. Now this updated carrying amount you will compare with recoverable amount. Updated carrying amount will be compared with recoverable amount, and if this updated carrying amount, which is after providing depreciation, after providing for revaluation if any, is more than recoverable amount, I am going to provide for impairment loss, which is carrying amount minus recoverable amount. Is it right? And then we will provide impairment loss. Impairment loss will be only if carrying amount exceeds the recoverable amount. If carrying amount is less than recoverable amount, then the asset is not impaired. Subsequent depreciation charge will change because the asset's carrying amount has gone down. So subsequent depreciation will be provided on reduced carrying amount over the remaining useful life. Depreciation charge will reduce because you have impaired the asset in the books of account. The carrying amount of asset is reduced in the books of account, but the block of asset does not change. Block of asset does not change. Impairment loss is an expense in the books of account, but not allowed for tax purpose. Oh, you will study in your income tax law. You can ask your income tax teacher that whether income tax law allows impairment loss as a deduction. The answer is no, because income tax allows only depreciation based on historical cost. Okay, so it will give rise to deferred tax asset or deferred tax liability, because impairment loss is treated as an expense not allowed in the books. Sorry, you have provided in the books but not allowed for tax purpose. It will be allowed in future, because in future the depreciation charge under tax book will be more than the depreciation charge in the books of account. So it is a timing difference. The difference will originate and reverse in the future period. So impairment loss provided in the books will give rise to deferred tax adjustment. Deferred tax you are going to study in accounting standard 22. Today is not the topic for deferred tax. Okay, and we don't have questions also where you have to deal with deferred tax. So what are the steps you will follow? Okay, what are the steps you will follow for the purpose of calculating deferred tax? Okay, for the purpose of calculating impairment loss, kindly pay attention. First, we will calculate recoverable amount. When you are solving a question, you need to find recoverable amount. For that, you need to compute value in use and you need to compute net selling price. Okay. Now remember, if value in use is more than carrying amount, don't calculate net selling price. Or if net selling price is more than carrying amount, don't calculate value in use. If one of the two numbers is already higher than carrying amount, no need to calculate the other, because in that case your recoverable amount is more than carrying amount and asset is not impaired. Next line, AS 28 does not require calculation for both if value in use calculated is more than carrying amount. Very simple. recoverable amount is higher of the two, value in use or net selling price. Impairment loss arises when recoverable amount is below the carrying amount, but if value in use is more than carrying amount, recoverable amount is more than carrying amount, hence no impairment. Or asset is not to be used and hence it does not have significant value in use. For those assets which are not required to be used now, if it is not used, not to be used, then it does not have value in use. Then I need to only calculate net selling price. So the asset which have been retired from the use, I will compute only net selling price. And third is where calculation of net selling price is not possible. The asset may be of such nature that you are not able to find its net selling price. There is no market, there is no latest transaction, there is no valuation trick available for finding the net selling price, then you have no choice but to only use value in use. Okay. When net selling price cannot be calculated or is not reliable, then only compute value in use. In these three scenarios, we are not required to compute both of them. Then you can only compute one of them. How to compute net selling price? Find out the selling price of the asset, which I have told you on the first page of this chapter. I am not going into detail again. There are first preference, second preference, third preference. Refer the first page of the chapter, and from that you deduct the cost of sale or disposal. Example of cost of sale or disposal: when you have to sell an asset, you might incur legal cost, you might incur stamp duty, you might incur commission, you might incur some dismantling cost whose provision for decommissioning is not yet made. So if all these costs will be incurred for the purpose of completing the sale, they are called cost of disposal or incremental cost to be incurred to sell the asset. That will be deducted. But what will not be deducted? Please keep in mind, finance cost will not be deducted as a disposal cost. Example of finance cost: interest, preference dividend, equity dividend. These are suppose finance cost. Don't deduct it because that is not incremental cost to complete the sale. Similarly, income tax will not be deducted. The cash flow should be before income tax adjustment. Income tax will not be adjusted. Now we'll solve one question, number 6. So all of you will participate in the discussion. Those who are watching the lecture live, they can reply on the chat box. Okay. So I will solve many questions today and I am sure you would like it. Some of these questions are from reference books also. For the benefit of student, we are going to take variety of questions. So many varieties are not covered in our study material or any other book. You will find it only in our book. A Limited purchased an asset for 8 lakh. Cost is 8 lakh and the life of the asset was 10 years. So annual depreciation would be 80,000. Annual depreciation would be 80,000. The company provides depreciation at 10% straight line method. That is 10%, 1 by 10 every year. 80,000 every year. At present, the remaining life is 3 years. So 7 years are over. If 7 years are over, 80,000 into 7 years, depreciation already charged is 5,60,000 and carrying amount of the asset will be 8 lakh minus 5,60,000, which will be 2,40,000. Carrying amount will be cost minus accumulated depreciation, 2,40,000. So first number I got is carrying amount, which is 8 lakh cost minus 5,60,000, 2,40,000. Second thing, and the recoverable amount of the asset is estimated at 90,000. Recoverable amount is 90,000. So first we'll check whether the asset is impaired. Yes, because carrying amount is more than recoverable amount, asset is impaired, and the impairment loss would be 1,50,000. Impairment loss will be 1,50,000. Okay, so first question is find the impairment loss. Impairment loss is 1,50,000. I have written the answer in the book. You only have to focus on understanding. Answer is printed in the book in the similar manner. So no need to write the answer in notebook right now. In homework you will solve in the notebook. What is the second question? The second question is how the asset will appear in the balance sheet. How the asset will appear in the balance sheet. So first thing we have studied about impairment loss. The answer is printed. So I am not dictating again because I have to write the same thing. In the balance sheet, asset side, it is an extract, not the complete balance sheet. We have non-current asset called PPE. Original cost is 8 lakh, less accumulated depreciation 5,60,000, and less impairment loss 1,50,000. So now the carrying amount after providing impairment loss would be 90,000. So this type of basic questions are asked from a student at your level. Now we'll go to question number 7. Here we'll have to do some more calculations. Question number 7 is, a plant is being shown in the balance sheet at the carrying amount of 42 lakh. Its remaining life is expected for 6 years, after which it would be scrapped away for rupees 6 lakh. So you have a scrap value of 6 lakh rupees and its remaining life is 6 years. The net cash flow from the use of the plant during the next 6 years are 10 lakh for first 3 years and 8 lakh each for the next 3 years. What is the relevance of this information? This will help you to compute value in use. And don't forget, you are also going to get 6 lakh from the sale of the asset. The discount rate applicable is 15%. This is for computing value in use. Net selling price is 40 lakh. This will be required for calculating recoverable amount. Find out the following. First is value in use. For that, you will have to compute the present value of future cash flow from the use of the asset plus salvage value 6 lakh. Then you have to compute impairment loss, if any. Recoverable amount of the plant, higher of the two, net selling price, which is given 40 lakh, and value in use, which you are going to compute in the step number 1. And finally, so this is your first question. In the second question, what they have done? They have changed the question. The question is now, what will be impairment loss if the net selling price is 35 lakh? If the net selling price is 35 lakh, then probably my recoverable amount will change. And if my recoverable amount will change, then my impairment loss will also change. So what I am going to do, I am going to first compute value in use by discounting future cash flows at 15%. Then I am going to compute recoverable amount, taking higher of the two, value in use, net selling price, and then I am going to compute impairment loss if any. Carrying amount is given in the question itself, 42 lakh. And then case 2, again solve the same problem by assuming that the net selling price is 35 lakh. So write down first value in use. Value in use means calculation of present value of future cash flow. In this question discounted at 15%. So our table will be year, cash flow, discounting factor at 15% and present value. Is it right? So first we will write down year 1, 2, 3, 4, 5, 6. Those who have the book can check in the book. I have prepared the answer for you. Cash flow will be 10 lakh for first, second, third year, 8 lakh for fourth and fifth year, and in the last year it will be 8 lakh plus salvage value, 8 lakh plus 6 lakh, that is 14 lakh. Now I will calculate discounting factor. Discounting factor means present value factor of 1 rupee. 1 divided by 1 plus r to the power n is called present value factor. Present value factor means if you receive 1 rupee after 1 year, what is its present value? If you receive 1 rupee after 2 years, what is the present value? For example, for first year, if you receive 1 rupee after 1 year, the present value factor will be, example for year 1, 1 divided by 1.15 equal to, so you write down 0.8696. Okay, can you see 0.8696 on this calculator? And now you press equal to again, you will get the second factor. Again press equal to, you get the third factor. Again press this equal to, you will get the fourth year factor. Press equal to fifth year factor and press equal to again, you will get the sixth year factor. This way you can compute your PV factors. Is it right? Now what you need to do, you have to multiply cash flow and PV factor to get the present value. So multiply on your calculator 10 lakh into 0.8696, 869,600, memory plus, use memory plus. Again 10 lakh into 0.7561 equal to memory plus 756,100. Again 10 lakh into 0.6575 equal to memory plus. Do it for all the remaining calculations. Do it for all the remaining calculations. What is the total? Memory recall. If you have used memory plus function, memory recall, and your total is 37,43,620. This is called value in use, present value of future cash flow, and also the salvage value, value in use. Okay, now step 2 you will write recoverable amount. Recoverable amount is higher of the two. Higher of the two, which two? First, net selling price, which is given 40 lakh in the problem. Value in use, which we have computed from the previous table. Compare the two. Net selling price is 40 lakh. Value in use 37,43,620. So what is the recoverable amount? Choose the higher of the two. A businessman would choose that option which is more beneficial to him. If continuing with the asset is more beneficial, continue. If selling the asset is more beneficial, sell. So we have to write 40 lakh. And then next is calculation of impairment loss. Carrying amount is 42 lakh, this is given. write given. Carrying amount is given 42 lakh and recoverable amount as per working note 2, previous working note 40 lakh. Carrying amount is more than recoverable amount. Therefore, impairment loss is 2 lakh. Therefore, impairment loss is 2 lakh. Okay. Now, next point is, what will be impairment loss if net selling price is 35 lakh? So, my recoverable amount will change. Carrying amount will be same. Question is changed. Carrying amount is 42 lakh. Recoverable amount will be higher of the two. Recoverable amount will be higher of the two. Net selling price has changed. Can you see this? This is different because the question is different, and value in use will be same. This time the higher of the two figures is value in use. Higher of the two figure is value in use. So take the value in use in the outer column. Is there any impairment? Again, yes, because carrying amount is more than recoverable amount. So there is an impairment loss of 456,380. Note it down. If you have any doubt, ask me. If you have any doubt, ask me. No doubt? Okay, if you have any doubt, you can mail me at vinod_ca@yahoo.com. For doubt solving, you can WhatsApp on 97669 21860. So this is for WhatsApp. When you will ask the doubt, write your question in detail. Write the question, put the page number, question number also, subject also, photo of the question also. Otherwise, it is not possible to answer. Okay. If you ask the query in a proper manner so that the teacher can understand your doubt, he will be able to reply it faster. Question number 8. Question number 8 is, Venus Limited has an asset which is carried in the balance sheet on 31st March 2005 at 500 lakh. So what do you call this 500 lakh? This is carrying amount. This is called carrying amount. At that date, the value in use is 400 lakh. The value in use is 400 lakh. Net selling price, fair value less cost to sell means net selling price is 375 lakh. From the above data, calculate impairment loss. So I will tell you impairment loss. Carrying amount is 500. Recoverable amount is higher of net selling price or value in use. So this is 400. Therefore, 100 will be impairment loss because recoverable amount is 400 only. Carrying amount is 500. Recoverable amount is higher of the two, that is your net selling price and value in use. Hence, you have an impairment of 100. This is my first answer. Second answer, prepare journal entry for adjustment of impairment loss. Then you have to pass journal entries. And third, how the impairment loss will appear in the balance sheet. Important question. This is probably in your study material also. So how do you present the answer is important. First thing is, recoverable amount is higher of the two, that is value in use 400 lakh, net selling price 375 lakh, 400. And impairment loss is carrying amount minus recoverable amount, 500 minus 400 is equal to 100 lakhs. This is right. Second question is journal entries. Journal entry number 1, is it a revalued asset or a non-revalued asset? it is a non-revalued asset. So my entry would be impairment loss account debit to provision for impairment loss 100, and this impairment loss we are going to transfer to P&L account. Impairment loss, if it is a non-revalued asset, will be fully transferred to profit and loss account. Impairment loss account debit to profit and loss account. But what about this ledger which you have created? This will appear as a deduction from asset. I will show you now the balance sheet part. In the balance sheet, you will write asset less depreciation 500, less impairment loss 100. Asset carrying amount is 500 given in the problem. Impairment loss we have computed 100. Therefore, in the balance sheet, the answer would be 400. The carrying amount will be 400. So do this much in the exam, you will get 4 or 5 marks. These 3 questions that we have taken today, these 3 questions were based on non-revalued asset. Now we are going to take a question on revalued asset. Tick mark, very important. Question number 9. Very important. Question number 9. This is a question on revalued asset. Okay. The following information is available in respect of an asset. Cost 28 lakh, life 10 year, salvage nil, no salvage value, life remaining 3 years, upward revaluation done last year. So there is a balance in revaluation reserve equal to 7 lakh. There is a balance in revaluation reserve equal to 7 lakh. Current carrying amount is 13 lakh 50,000. How they have computed, I don't know, but they have computed. So I will take the current carrying amount. Do not try to calculate yourself. Do not try to calculate yourself because the carrying amount is given. If it is given, please use it. Okay. If it was not given, then you will depreciate 28 lakh over 7-year period and find out the carrying amount. But if it is given, you will use it. And they have also calculated recoverable cost 6 lakh. Question is, the asset is impaired at the end of the year, which is clear. Impairment loss is equal to 13,65,000 carrying amount minus recoverable amount 6 lakh. So the impairment loss is 7,65,000. Very easy. Question is, the asset is impaired at the end and then the depreciation for the current year is charged. Find out the impairment loss. The first answer is 7,65,000. Then it says, and the depreciation for the current year. That is second question. Third question, give the treatment of impairment loss. This question is probably in your study material also. You need to check. First, I will answer this part. Treatment of impairment loss. You have a revaluation reserve of 7 lakh and your impairment loss is 7,65,000. So the treatment will be, first rupees 7 lakh will be adjusted against revaluation reserve. and then rupees 65,000 will be adjusted against profit and loss account, and then rupees 65,000 will be adjusted against profit and loss account, because earlier you have revalued the asset upward. Now the same asset is impaired. So first you debit revaluation reserve. After providing for the impairment loss, depreciation charge will change. Now the revised carrying amount of the asset will become 6 lakh and the remaining life is 3 years. 6 lakh divided by 3 years, the answer is 2 lakh. So your 3 answers are over. First answer was how much is impairment loss? 7,65,000. Second answer, how the impairment loss will be charged? Against revaluation reserve 7 lakh, against P&L account 65,000. Third question, depreciation after providing impairment loss, revised carrying amount 7 lakh over remaining useful life 3 years, therefore the answer is 2 lakh. Is it right now? Same question number 10 homework. Question number 10 homework. If you look at the question, it is question number 9 multiplied by 2. All figures they have simply multiplied by 2. Can you see that? So do it as homework. Only you have to change the numbers. Now we'll go to question number 11. Question number 11. Ego Limited purchased a fixed asset 4 years ago. 4 years ago means we have to find its carrying amount first, at a cost of 100 lakh and depreciates it on SLM basis at 10% per annum. So what will be the carrying amount? This question is very important. It was given in your current study material, RTP November 12 and May 2013 exam also for 5 marks. So trust me, this is important. Carrying amount will be, cost is 100 minus depreciation will be 100 into 10% per year into 4 years are over. So depreciation is already provided 40. So now the carrying amount today is 60. Do you agree? Do you agree? Say yes or no. Yes, do you agree? Carrying amount is 60. Okay, now next line. At the end of the year, it has revalued the asset at 50 lakh and has written off the loss on revaluation to profit and loss account. At the end of the year, it has revalued the asset to 50 lakh. Oh my God. So as I said, if you remember, first I need to provide depreciation, which they have done. Then you need to apply revaluation if you are following revaluation model. Revalued amount is 50 lakh, whereas carrying amount is 60 lakh. So there is going to be a revaluation loss of 10, 60 minus 50. There is going to be a revaluation loss of 10, that is 60 minus 50. Revaluation loss is calculated under AS 10. Please remember, revaluation loss is as per AS 10. Impairment loss is as per accounting standard 28. So if an asset is to be revalued, if it is a revalued asset, then you have to apply AS 10 first to check whether there is any loss due to revaluation. So you got 10 here. So now my carrying amount, please reply, what will be carrying amount after revaluation loss? It was 60 minus 10, so now the answer is 50. Up to this is revaluation adjustment. I will draw a line here. However, on the date of revaluation, the market price is 45 lakh and the expected cost of disposal is 2 lakh. So net selling price is 45 minus 2 is 43 lakh. That is net selling price. What will be the treatment in respect of impairment loss on the basis that the fair value for revaluation purpose is determined by market value and the value in use is estimated at rupees 40 lakh. Value in use is 40 lakh. So recoverable amount will be higher of net selling price and value in use. Net selling price is 43 lakh. Net selling price is 43 lakh. Value in use is 40 lakh. Net selling price is 43 now. Now we are applying impairment under AS 28. So recoverable amount is 43 lakh. Are you agreeing? Recoverable amount is 43 lakh and the revised carrying amount after providing revaluation loss is 40. So the question is whether there is any impairment loss. So I will tell you the whole story again. You purchase an asset for 100 lakh. Total depreciation provided 40 lakh. Carrying amount 60 before revaluation loss. Then after providing revaluation loss of 10, carrying amount is 50 lakh. Then you computed recoverable amount which is 43 lakh. 50 versus 43. So the answer is now you will have to provide for impairment loss 50 lakh minus 43 lakh, that is 7 lakh. Now this is a funny question because first you provided revaluation loss. Done, no problem, you can do that. And then you provide impairment loss under AS 28. Is it right? AS 10 is different, AS 28 is different. First you do depreciation, then you provide revaluation loss if any, and then you provide impairment loss if any. So that was a good question. Please read the answer yourself. Answer is printed in the book for your benefit. Exactly what was explained to you is appearing on the screen. Students are requested to kindly read the answer for question number 11. I have given the answer in detail, okay, so that the student can understand with all computation and explanation printed in our book. Our book has been very thoughtfully designed for the benefit of the student, and if you rely on our book also, it will be enough, okay. So follow the lectures, follow the book, revise the book 2-3 times and you will get very good results. After computing the revised carrying amount, find out the recoverable amount which is 43, compare it with the carrying amount after revaluation 50, and you get an impairment loss of 7. Okay, now we'll go to question number 13. Question 12, homework. Same question we have done, so I am not repeating it again. Question 13 now. Question 13. Very important question. Very important question, and you will get to see in detail how this chapter is applied. Okay. So we are on question number 13, and it is very, very important. You must mark it and you must practice it. Mars Limited gives the following estimate of the cash flows relating to property, plant, equipment on 31st March 20x4. The discount rate is 15%. I am going to use 15% as discount rate, and this is cash flow relating to property, plant and equipment. Underline, cash flow relating to property, plant and equipment. So from this PP, these cash flows are generated. We are on 31st March 2004 and we are projecting the cash flows of the future. Next 5-year cash flows are given, and in the last year, 5th year, you have a residual value of 500 also. Property, plant and equipment was purchased on 1/4/2000 for rupees 20,000 lakhs. So how many years are over? 2002, 2003, 2004. 3 years are over. 3 years are over. Useful life is 8 year. Useful life is 8 year. So depreciation will be 20,000 minus residual value divided by 8. So this will be my annual depreciation. 20,000 minus residual value 500 divided by 8 multiplied by 3 will give me accumulated depreciation. Then it says residual value estimate is 500 lakh. That will be required for depreciation, that will be required for value in use also. And now the net selling price is 10,000 lakhs. Net selling price is 10,000 lakh. So you will have to write the question, which is not presented properly. Question is calculate impairment loss and show presentation in balance sheet. Also calculate revised depreciation. Also calculate revised depreciation. Calculate impairment loss. Show the presentation in balance sheet. Also calculate revised depreciation. So in one problem again we are going to learn the whole concept of impairment. Ready? So first I need to find out the carrying amount. Then I need to find out value in use. Then I will compute recoverable amount. Then I will compute impairment loss. Then I will compute revised carrying amount. Then I will compute revised depreciation. And then I will show the presentation in the balance sheet and profit and loss account. Okay. So the presentation in balance sheet and write down P&L account. Show the presentation in balance sheet and P&L account. So you are solving a very important question. First, point number A, carrying amount on 31/3/2004. So here my answer is, those who have the study material can tick mark in the study material. I have prepared the answer myself and I have printed in your book to save your time. As a homework, without fail, you will solve it in your notebook today. So you should promise that yes, we'll do it. Okay. In case if you want to write in notebook right now only, you can do it, but you have to be a little fast. So write carrying amount on 31/3/2004. Original cost is 20,000 lakh, less depreciation 20,000 minus 500 divided by 8 years, that will give you annual depreciation, multiplied by 3 years. calculate an answer. So the total depreciation comes to 7313. 7313. Therefore carrying amount 12687. Therefore carrying amount 12687. First answer is carrying amount is 12687. After that we'll calculate value in use, and for that draw these 4 columns: year, cash flow, present value and present value amount, present value factor and present value amount. Third column is present value factor. Fourth column is present value amount. Okay, so write down 2004-5. Keep this calculator with you. The discount rate is 15%. Write down discount rate is 15% in the question. How do you get the factor? I will explain again. This is your 1 divided by 1.15 and press equal to. So you will get the factor. Okay, press equal to again, you will get the next factor. Press equal to again, you will get the next factor. Press equal to again, you will get the next factor. And in the last year, you will also add the residual value. So please note down, cash flow will be 2000, 3000, all given in the problem. 3000, 4000. Be careful, in the last year I have to add 2000 plus 500. I have to add 2000 and plus 500. So what is your answer now? One two four two. 1242. Please tell me the total of present value amount. Present value amount comes to 9510. 9510. The total comes to 9510. This is value in use. Any query on this? After that, we'll compute recoverable amount. Under recoverable amount, we have 2 numbers to compare. First is value in use, 9510. Second, fair value less cost to sell, means net selling price. It means net selling price. Don't write this. Write net selling price. Net selling price is given in the problem, last line, 10,000. Therefore, recoverable amount, higher of the two. Which is higher of the two? 10,000 is higher of the two. 10,000 is higher of the two. So for further calculation, I will use 10,000. I have got carrying amount in my step 1, 12687. I have got recoverable amount 10,000. Now I am going to compare carrying amount and recoverable amount. That will give me impairment loss. So please reply. Please reply, how much is your carrying amount? 12,687, step 1. Recoverable amount, step number D or C, 10,000. So therefore my impairment loss will be 2687, and I am going to reduce it from the carrying amount. I will get the revised carrying amount. Reduce this from carrying amount, you will get revised carrying amount. So please write down step number E, revised carrying amount. Revised carrying amount after providing impairment loss. After providing impairment loss, carrying amount before providing impairment loss 12687 minus impairment loss in the step number D is 2687. Therefore, revised carrying amount 10,000. Therefore, revised carrying amount 10,000. Therefore, revised carrying amount 10,000. This 10,000 now will be depreciated over remaining 5 years, and there is a residual value of 500 also. So my question was, what will be revised depreciation? Write down revised depreciation, very important question. My carrying amount now is 10,000 and the residual value after 5 years is 500. So depreciable amount will be only 9500. Depreciable amount is only 9500. Carrying amount minus residual value is depreciable amount. This is the amount which you can depreciate now over the remaining useful life. What is the remaining useful life? Remaining useful life is 5 years, and therefore revised depreciation is 1900. 2 marks for this also. So this completes my basic calculation part. They have asked you the presentation in the balance sheet also. So write down balance sheet. But balance sheet presentation we have to give on 1/31/3/2004. Asset side. Right here asset side. An extract I have written in your book. So asset side we have non-current asset PP. Note number 1, 10,000. Preferably we should give the detailed presentation in the notes. So 10,000. How this 10,000 has come? You will write below in the notes to account. Notes to account PPE. Your original cost was 20,000. Original cost 20,000. Before impairment loss, you have provided for accumulated depreciation for 3 years, which is 7313. You have provided for accumulated depreciation of 7313. Plus you have also provided for accumulated impairment loss, which we have done in step number D. Step number D, 2687. 2687, and therefore 10,000. If you present like this, you will get full marks. Nobody can challenge your answer. And one last thing, how this will appear in the statement of profit and loss? In the statement of profit and loss for the year ended 31st March 2004, I have to disclose two things. I have to disclose depreciation and amortization, and I have to also disclose impairment loss, including impairment loss. So depreciation will be 2438. How this 2438 has come? If anybody interested in knowing, your annual depreciation charge is 20,000 minus 500 divided by 8. So that is 2438. This is per annum depreciation, and this is impairment loss. Okay. Depreciation is 2438 and impairment loss is 2687. So in the year ended 31st March 2004, your profit and loss account will take a hit of 5128. 5128 will be charged to your profit and loss account. Is it right now? Now we are going to take question number 14. Question number 14, very, very important. Again, very, very important. Ergo Industries Limited gives the following estimate of cash flow relating to fixed asset. So this is cash flow relating to fixed asset. All cash flows which this fixed asset will generate on 31/12/10, discount rate 15%, 5-year cash flows are given, residual value is given. Fixed asset was purchased on 1/4/18 and today is 31st December 2010. So 2008, 9, 10. 3 years are over. Useful life is 8 year. Net selling price is 20,000 lakh. Same question we are practicing one more time. So you have to calculate on this date 31/12/10 value in use, carrying amount, recoverable amount and impairment loss. So very basic question. Let us solve it fast. First we'll compute value in use. Present value factor is 15%. You can copy from previous question or you can again do on your calculator 1 divided by 1.15 equal to, you'll get this answer. Again if you press equal to, you'll get this number. So do this exercise quickly. Find out the value in use, keep pressing equal to, you'll get the factors and just multiply by the cash flow. Last year I will write two things. 4,000 I will write because cash flow and 1,000 is salvage value. Now what you do, tell me the total of the last column. Tell me the total of the last column. Kindly tell me the total of the last column. So that comes to 19025. Very good. Is right. This is called value in use. Value in use. 19025. First answer is over. Second, what is carrying amount? So for carrying amount, I need to depreciate for 3 years. Original cost was 40,000 lakh. Depreciation for 3 year. Depreciation for 3 year. Cost 40,000 minus residual value 1,000 into 3 years over divided by 8 years useful life. So that comes to 14,625. Therefore, carrying amount today will be 40,000 cost minus accumulated depreciation 14,625. Carrying amount on the date you have decided to impair, check the answer, 25,375. Is it right? Is 25,375? Next question is, what is recoverable amount? We are doing it again and again, so you may find me little fast, but please excuse me. We have done it 4 or 5 times today. Recoverable amount is higher of the two. Value in use non-9025 and value in use is 19025. Net selling price is 20,000 in the last line of the question. So recoverable amount is 20,000 lakhs. Now if I compare recoverable amount with carrying amount, I find recoverable amount is lower. If recoverable amount is lower, I need to provide for impairment loss. So that impairment loss will come to 5375 lakhs. Carrying amount minus recoverable amount. So impairment loss 5375 lakhs. Okay. Today we'll stop here. Thank you very much. And please, I request all of you again that these high quality lectures are available on our YouTube channel AS Foundation. Immediately subscribe, immediately join, like, share your comment, and most importantly, share with all your intermediate friends, maximum number of your intermediate friends. That is the only thing that I can expect that you must do as a part of this learning process. Share this video with all the students that you know of who are in intermediate, whatever WhatsApp groups you have, whatever Telegram group you have, share it. Everybody should have the right education. If you learn right, you will write correct answer in the exam. You will have confidence. Our accounting standard lectures are the best as far as your exams are concerned. Do not compromise with the quality of your learning. Everything we are going to cover in the accounting standard. Other accounting standards are also uploaded on the YouTube channel. Take the advantage of it, learn from it, and your accounting standard lecture on YouTube will sync with our accounting standard book. And it's a very comprehensive book covering last 20 years of questions, answer, arranged topic wise. So you can purchase it from our website vinod.in. You can call on our number which is appearing on the screen also below, 97669-21860. Okay, and one more number, 96676711155. Website is vinod.in. You should purchase books, video lecture of high quality for your exam. You want to come in rank? Yes. You want to pass in first attempt? Yes. But then you need right resource also. So we are going to provide you the best resource for your intermediate exam. And trust me, thousands of students have got very, very good marks in advanced account because of our books and the lecture, and you can also be one of them. You can ask anybody who have learned from us and they will be able to give you a better feedback. Thank you very much.